It's TA with MK. It's TA with MK. Gents and ladies, no time to waste. Don't be afraid, it's time to trade. Let's start your brains like high-speed trains. Storm these games like hurricanes. It's time to save this herd this days. Put on your cape and learn the phrase. It's TA with MK. It's TA with MK. Hello there. I want to welcome you to another episode of TA with MK. My name is McKay. And in this episode, we are going to talk about a pattern that is very common in crypto as it relates to TA and trading. Now, this pattern is known as the falling wedge or falling channel or rising wedge or rising channel. Let's go. As is customary, we are going to start by going to our browser and going to TRADINGVIEW.com. And I'm actually going to bring up a chart for, let's do MANA, which is Decentraland. The ticker is MANA, and then we're going to do the USDT pairing. And then I always like to choose Binance if it's an option, just because it'll have the most price history in most cases. First thing I'm going to do is double click in the empty area so I have just price action. And then I'm going to go over here to the left and hit the trash can just to make sure everything's cleared up. Now that we got a brand new clear chart, I'm going to actually go up here to the top left on mine and get rid of this VPVR thing. I'm just going to hide that so it's not taking up screen. And then up here next to MANA on the top left where it says 4 hours, I want to go ahead and change that to 30 minutes. And then go ahead and scroll price action out a little bit so I can kind of see more zoomed in what's been going on with MANA as of recently. Now, the biggest thing when you're trying to spot a falling wedge, now just by definition, what a falling wedge is going to be, it's going to be price action going downwards. You know, if it's a falling wedge, it's got to be going down, right? It's not climbing, it's falling. So by definition, it's going to be going down, but you're going to be looking for two or more touches of price action that's inside of a channel or a wedge heading in the downward direction. So let me give you an example. I'm going to go up here on my toolbar. I'm going to click trend line. And right off the bat, I can kind of see price action appears to be in one of those, or was in one of those recently. I can kind of drag down. And if you look right here, I'm going to go ahead and change this to from 4 to 2px. That's why it's a little bit skinnier, not quite so thick. And I'm going to change it to yellow. I like my trend lines to be yellow. So drawing from the top of this candle wick, you can see there's a touch here, here, and then if I drag it, it's not completely perfect, but all really, really close. You have 1, 2, and 3 touches down here. On the other side of that, I can draw. You can kind of see how this is forming a wedge. You've got 1, 2, 3, 4, basically about 5 touches along that side. Now, on the flip side of that, I can look at previous price action before this falling wedge was forming. Use my trend line again, and I can kind of see that we had a little bit of a rising channel going, or rising wedge. You can kind of see price action had down here 1, 2, 3 touches on the way up. 1, 2, 3, 4 touches along the bottom of that trend line. Now, the biggest thing to keep in mind as it relates to falling wedges or falling channels or rising wedges or rising channels is that in the case of a falling wedge, it has a 68% chance that it breaks to the upside. It's what we consider a bullish pattern. You know, even though the price is going down, there's a 68% chance at some point it's going to reverse to the upside, right? Flip side of that, your rising channel has a 68% chance of breaking to the downside. So that's a bearish pattern. By nature, a rising channel or wedge is going up. At some point, it's more likely to reverse to the downside, right? Now, I went ahead and took just a couple minutes and went back a couple days worth of price action for MANA. Actually, we'll say I went back clear to December. And I just, as you look, I'll scroll to the right. I just found a bunch of different quick examples of falling wedges and rising wedges, or falling channels and rising channels. So I guess the reason why I did this was just to kind of make a point that you could start to spot these things everywhere. When you're at the grocery store, Walmart, taking your dog for a walk, doing a handstand in your backyard, they're everywhere. And especially on all sorts of time frames, you can find them on low 5-minute time frames. You can find them on 30 minutes in this case. You can find them on 1 hour, 4 hour, daily, etc. And in the next segment, I'll explain a little bit about how the bigger the time frame, the more valid the wedge is. More significant, I guess is the better word, but I just want to kind of show you that these things are all over the place as far as charting goes. Now I'm going to go ahead and click the trash can down here on the bottom left to clear my chart back up so there's no more drawings or trend lines on there. I'm going to switch it now from 30 minutes to, let's do 4 hours. And then I'm actually going to scroll price action out a little bit so I can get a better picture. Something like this. Now we're going to drag this over and scroll out even more, drag it over a bit more and scroll out even more. And we're going to focus on price action kind of right around, let's do it here first. Let's go between 10th of November of 2021, clear up here to the later in November of 2021. We're going to grab our trend line, and I can kind of see that price was in a bit of a rising channel. We got almost one down here, but we'll call this 1 touch, 2 touch, 3 touches, right? Across that side. Then across the top, you had 1, 2, 3 touches. So it was in a rising channel up till this point when it broke to the upside temporarily, which went against the odds. The odds were there was a 68% chance this should have broken to the downside. In another video segment, we'll explain the concept of fake outs and breakouts. In this case, this was a fake out. It broke to the upside, came back down, but when it went to retest, it actually broke back inside the pattern, hit the top, and then did what statistically it was supposed to do in the first place, and it broke actually to the downside, right? Now, what about prior to this rising wedge that was forming? Let's go ahead and go back a little further, spread out our price action here just a little bit. You can kind of see that price action was in a bit of a falling wedge for a bit there. Got a couple touches here, here, along the top. We'll draw along the bottom. So this one, which was a falling wedge or falling channel, in this case 68% chance that it breaks to the upside, well, eventually it did break, in fact, to the upside. Now I think it's important to understand there's a thing in trading called confluence. And confluence, I have a whole nother video I'll link in the description that you can watch. I'll probably do multiple parts to that video as well, but there is a video that just explains what confluence is. But basically confluence is just having multiple ideas come together to give you a clear picture or an idea of what price action might do, because that's all we're trying to do with patterns and supports and resistances and all of this stuff is just to get an edge, right? Well, just a falling wedge in itself or a rising channel in itself, we know has a 68% chance of breaking one way or the other, depending on if it's a falling wedge or a rising wedge. However, there's other clues or confluence that you can put together to give you a better idea of what direction it's most likely to break. Basically, I just said a whole lot to say very little. Basically, what I'm saying is don't trade any of these pattern ideas by themselves. You want to combine them with other ideas. And I'll give you a few examples right now as it relates to falling wedges and rising wedges. Now, using our amazing skills of finding support and resistance levels based on price levels, link in the description for that video as well, we went ahead and quickly charted some support resistance, and I've indicated by this red zone that this area was important as far as it relates to support and resistance. You can see price action broke above it, retested it back here in mid-November. It acted as support. Later, it acted as support again and again, that area, and again here. Eventually, it lost it, even acted as resistance in early February. So clearly, that was an important zone, right, of support / resistance. Now, we're going to zoom in, switch over to the 1 hour time frame, just so we can get a little more price action in the area of interest for us. And I'm going to go ahead and zoom this out a little bit, and we're going to focus on this falling wedge here. I'm going to take my trend line. This is something I drew at the beginning of this video. Now we're going to redraw it. Top trend line there, bottom trend line there, right? So here is our falling wedge, and one touch, 2 touch, 3, 4 touches along the top right, several along the bottom. Now here's the key as far as confluence goes. Now, what would have given us a clue that this falling wedge had potential to break to the upside around the time it did? Well, you know that this red zone I'd put, which a lot of times I'll change them to green when they're currently support. But anyway, that's beside the point at the moment. But that zone of importance, which is, in this case, most recently been resistance back here, but it broke above it and retested it here as support. Well, once it got in this falling wedge, the last time it bounced was at the bottom of that zone. So the odds now that it has a chance of breaking to the upside are better, because not only is there a 68% chance that a falling wedge breaks to the upside to begin with, its last bounce was happening at critical support. Now I've zoomed back out to the 4-hour and changed this red zone to green to represent support. And I just wanted to point out that along with the confluence of the fact that it was bouncing at support before it broke to the upside, if you double click and show the indicators, which of course we'll go into more depth in future videos on how to use them to trade. But on the RSI, you can also see that it was in oversold levels at the same time that it was bouncing at support. Stochastic was also in oversold areas, and the MACD was curling to the upside. Now, I don't expect all of that to make sense at the moment. There will be separate videos over each of these indicators and how to trade with them, but just know that was more confluence to the idea that that falling wedge had a pretty high probability of breaking to the upside. Wow, you made it again. I'm very impressed. In conclusion, falling wedges and rising wedges channels are patterns that you can use to trade. They give you a statistical edge knowing that there's a 68% chance that they break to the upside or downside depending on the pattern. Keep in mind that you can also find confluence as you get better at this to give you an even bigger edge of knowing what direction they could potentially break. This is TA with MK, and my name is McKay. As always, I ask that you like and subscribe, and we'll catch you next time. Thanks. It's TA.